Hi, it's David here with Futures Trading. Thank you so much for stopping by the channel, and those that have joined, thank you for coming on board. I want to say to you, fate brought you here. I did not pay for any likes, views, or subscribers. Everything here is organic. Pretty much all the videos are in real time. I do not plaster my face on the videos. I don't have elaborate intros for you because I'm not trying to entice you to be a trader. I believe that you'll absolutely lose all of your money if you do not understand how to trade markets. And not just your money, you'll frustrate yourself and possibly annoy all the people that's around you while you're trying to learn this information. So I want to say to you again, thank you for stopping by. Everything that I teach here on the channel is universal. That means applicable to all cases. So it doesn't matter whatever market you're trading. It has nothing to do with prior education that you've received. Everything that I teach here is applicable and will show up in any winning trade. Any winning trade. I want to say that to you. Currently, I am offering my tools. All right, so we got a lot of free information here. Everything you would need is here. I want to say that to you right now. Everything here that you would need is free. All right, it's free and it's here. The information that I'm willing to provide, because that's all the tools are, it's just information, is $200, and you can obtain that and use the free version of NinjaTrader. All right, so you can use that free version should you want to have the flexibility, I would say, to get a little bit of confirmation on your chart. All right, that's all it is. It's worth more than $200. All of my free content is worth more than $200, and you'll get a chance to see just that because we're going to go over a lot of stuff, even the ICT stuff. We're going to talk about that. Most viewed videos here. You're more than welcome to take a look at this information here, and then of course I got a must-watch list. So it's kind of like a comprised collection of various different information I went over. If you've never traded before, you'll want to start here. This is the only real-time identification process that's online to tell you how to read the bar in real time. Mostly all of the thumbnails you're seeing on these videos are charts that we actually went over. Again, I don't have an elaborate intro for you. I'm trying to do my best to educate you and not entice you to be a trader. Universal threshold. So this is how far the bar will pull back into your bar before resuming. So it's a wick zone, a threshold, if you will, and it's found on every chart. Doesn't matter what chart you're trading. I don't care what it is. It's found on every chart. If you win, it's this. Then I gave you the universal price action method. All right. So this is 2 bars. You can use, I'm sorry, the universal price action trend. This is 7 bars, but every bar is a trend, and we'll talk about that as well. If you win, it's this. So price and price alone is all that I'm using to find the trend. Universal price action method. This is the 2 bar approach. If you win, it's this. So you're using a bar and possibly a bar and a half because we're going to read it in real time, and you'll need to get in it before the second bar actually finished. So you're not required to put a lot of risk on the line, but we need the majority principle involved, and we'll talk about that as well. The universal chart scale. I teach you how to look at the market using your chart, the absolute frame of your chart, the bezel of your chart. I teach you how to look at that without having to look left. You do not have to look left in order to know where the market is going to turn at. It's going to turn right in front of you. Right in front of you. You will not miss it. I promise you, it's going to turn right in front of you. And then, of course, at the bottom of the page, because I'm not here to sell you anything, I'm here to educate you. But should you want to take advantage of the rest of the information that I have, it's right here for you. Here's the indicators that I have created over the years. I was going about having a private community for just a few weeks, giving people a chance to kind of benefit from the run up on the daily. And we were able to capture pretty much the bulk of the trend distance using just a 5-minute chart. A 5-minute chart. The zones in these videos here was off of a 5-minute chart, and they were able to be in the trades for days should they have benefited from that information. There's a lot of private information that I had disclosed that's not available to you guys, but again, I'm trying to put this video as well as a couple others that I've done going about it, highlighting the indicator so that way you can actually see what it is that they're able to do for you. All right, so now that we got that out the way, and again, welcome. So glad you're here. So glad you're here. Fate brought you here. So let's get this done. Let's get this accomplished here. I want to capture that 9:30. It's roughly 9:04 right now. So we're going to dive into this information. Or you can just fast forward, whichever one you prefer. These goals are separated into primary and secondary categories. So I want to let you know that you have primary and secondary values. You have value systems in everything that you do. This is going to be important moving forward because we're going to look at the chart in the same manner. So that's why I'm showing you this. So you can read all the rest of it. I just want to let you know that this is important. Now, there's a level of compliance associated with this. All right. So you can read the whole thing. But the goal, of course, is to get your, I guess, your objective met. And the market has its objective. And I want to show you how to spot the objective of the market, because it's going to take a bit of compliance on your behalf in order to get you to give away your money. So when you take a trade, you're going to have to give it away, because it's going to take your initiative or your response to what it is that you're seeing in order to allow your stop to get taken from you. I want to help you not get your stop taken from you. That's all. So, fluid intelligence. Now, this is something very significant and very useful, because we got to read the hard right edge. We got to be able to read that hard right edge. And you can read this right here. I'm not going to read it for you, but I'm showing you these two things because this is really, really important. So, when you take this information in, I want to have you know that the market is a decision place. That's all it is. We have reference points of open, high, low, and close, but the market is a decision place. So, when you really understand that. I know a lot of people talk about algorithmic trading. Machines have to be programmed by someone's objective, someone's goal, someone's plan. And it takes compliance in order to get their plans to work. All right. So I want to make sure that you understand, even though there may be algos in the market, you have to be able to look at the market based on what's behind it. What is the market's design? So we're going to get to that. The truth about markets, and this is me telling you what I think about it. The trader is taught to believe that it is randomness. All right. This is what you're taught to believe, that it's random. I want to have you know that that's not it. The deception is the arrangement of an abundance of candles, but there are really only two on the chart. You can take a moment to read all of that if you would like. I teach everyone how to read markets like literature. That's important, because the market is just information. That's all it is. It's providing you information. All right. And just like a book or any other bit of literature there, I have you know, excuse me, once the title is in front of you until the last remarks, you're going to hear about everything that the title was about. And that's just how it works. And you can read that as well. This is what I'm looking for in the market. This is what I'm looking for. I'm looking for the majority principle. Of course, there's a couple other principles that I use when I code indicators. But the thing that's most significant that I want you to take with you is this rule right here. The majority rule states that the minority has to follow. So it's compelled to, it's forced to. Remember that compliance thing that we just talked about, or you just looked at? I want to have you know that that's significant. It's really significant. So when you look at the chart, you have to find the majority. The majority is really important. Again, there's a couple other principles that I use when I code indicators. So everybody want to know how to filter out ICT's information, all of the different blocks that they're coming up with, all these different strategies and all this other stuff. And they're trying to find the best gap, the value gap. They're trying to do all of that. And I just want to have you know that my tools take care of a lot of what that is. I want to have you know that my tools take care of a lot of what that is. It's just like a car. Let me just say this. It's like a car. Okay. It's like a car. When you have a car, you can talk about the muffler, the doors, the bumper, the sunroof, the disc changer. Well, they don't have disc changer anymore, but you get what I'm saying. You can have the driver, you can have different drivers. But at the end of the day, the thing that's running the car is the engine. Okay. Now it doesn't matter the type of car. It doesn't matter the type of car. The engine is the thing that's causing it to work. And so what I'm trying to introduce to the public is the actual function, the thing that makes it work. And so it doesn't matter the type of market, it doesn't matter the asset class, it doesn't matter what time of the day you want to trade. The only thing that matters is the actual engine. Now, my tools, the tools that I'm introducing to the public, deals with what type of engine it is. Can it get the activity down the board faster? Can it get it down the board faster? Why this pattern is preferred over this one here? The ICT information that's online has been introduced, and now everybody's online trying to develop some kind of version of which one is best and how to filter this one and how to filter that one, and they're ignoring the actual function, the function of the market. They want to talk about who's driving the car, what type of muffler does it have, what's the size of the wheels on the car. Even he discussed the markets in that capacity, where there's a lot of subjectivity. No one is stating the engine. This is the engine, and this engine has to be, well, a engine has to be in every car. every airplane, every truck, whatever motorcycle, there has to be an engine. And so what I want to do today is to help you understand the engine. Here's the engine, and it's really simple, and it will always do this. Again, the type of engine is why you would want to maybe obtain my tools, because they're going to show you, okay, this is the V8, this is the V12, this is the bigger engine. This is not the yes, it's an engine just like the other engines, but this one is a little bit bigger. I don't leave the public up to decide whether or not this this approach that I'm introducing to you, that's universal. I'm not going to leave it up to you guys to try to filter out which one makes more sense. I'm not going to do that. I did it for you, and so it's up to you if you want to be a part of that information. Now, the fluid intelligence, I had talked about that. Now here's that definition in summary, just really short here, so you can have it on the chart while I'm talking to you. And of course, procedural knowledge is important. So is the knowledge exercised in the performance of some task? Those that's been on the channel already know this information, but you may be new, so I have to talk about it because I had a couple questions on yesterday from someone that was a beginner trader. So I want to help anyone else that's viewing this information that may be a beginner. I want to help you understand without having to comb through all of the videos there. Would have kind of speed it up for you. Procedural is relating to an established or an official way of doing something. So when we go to trade markets, you will want to have a procedural approach. The doctor, he performs a procedure. When you go to court, there's proceedings. So everything that we do has to have an official or an established way of it being done. We can't go about it like that. And even if we did, let's just say that we do, that someone wants to use order flow, somebody else want to use oscillator, someone else want to use structure breaks, somebody else want to use let's say astrology in some way. I don't know. But you can use moving averages, whatever you want to use. But at the end of the day, if you take a winning trade, and each participant can take a winning trade all at the same time, given they're interpreting all that different information, order flow, support and resistance, all of the different ways you would want to go about trading. At the end of the day, the official way is what's making it work. And I want to introduce to you what that is. And again, you can take whatever approach to the markets you want, but the official way is the only way to get it to actually work. Okay, so we want to make sure that what we're doing is the official way of doing it. So you're looking at it. If the market is getting ready to go up, let's just say it's getting ready to go up. We're going to dive into that information up there. I want you to start looking for this. We want to get the mid of the bar above the prior bar's high. Okay, so we're already pretty much in an uptrend. I don't see a downtrend on the board. We had 1, 2, 3, 4, and that's only 5 candles down. And they all have to be lower. So let me go ahead and mark this for you. So we're trying to get the 7. I don't have that rule on the chart. That's in the other video, but I want to put this in front of you. 1, 2, let's say 3, 4, 5. That is only 6 candles lower. So it can go back up. It can. Now that I've done that, let me open this up just a bit. Now that pressure, I'm gonna just open this up just a tad bit. The pressure is going to flash up here, and these are tools that I created: the bar coloring, the text, the pressure that you'll see eventually. That's going to flash if they can get this blue line. That's the other thing I want you to know. We want to get this blue line above the high of that candle. If that happens, you're going to see a pressure come in up here as well as down here. It just depends on which side of the market you're on, and it will fire off. All right, so. But that's what we're looking for, just to get it to go. Now, there's a universal threshold to every bar. Okay, so there's a place by which the market will pull back into the bar and then possibly resume. Matter of fact, let me open this up some more so you can see that part of it as well. Let me just kind of open this up just a bit more here. All right. Don't worry about this red zone. We're going to talk about that in just a moment. That deals with a target. All right, so this is that threshold. Okay, so the market can pull into that area, and this one has it too. This one has it too, roughly, give or take, same thing. No, actually, it's above that. I'm sorry. Okay, so it's right there. All right, so give or take. All right, so there we go. So that's the threshold. We want to go about universal. What's universal? Now, let me kind of compress this down so I can finish covering this little diagram here. All right, so that's the threshold here. We're looking for this information here to show up. That information right there, we want that to show up. But should that not happen, guess what? It's just the opposite. It's still the same rules. And that's the thing. It doesn't matter the direction. We're not talking about the front end of the car or the back end of the car. We're talking about the actual engine that's in the car. Okay. So we're not talking about is are we going forward and drive or are we going backwards and reverse? We're not doing that. What we're going to talk about is the actual function of the engine itself. And that's important that it can do both. All right, so and that's important. You'll want to be able to read the market in real time. That's what fluid intelligence is all about, being able to read it in real time. If you cannot read it in real time, I suggest you stay on this channel until you can. Now, this is who we are. We have thoughts, action, habit, character, and destiny. All right, so every time we do something, we have the end in mind. I know you see this little diagram on the chart here. This diagram is your mind. Okay, so we get this going. You have the end in mind. Okay, so all you have to do is when you make a choice, okay, starting with the diagram, when you make the choice to move into action, your end is in mind as well. So you'll have a destiny attached to it. We choose outcome, but we cannot control it. We trust in the function of it. So fluid intelligence is the function of the mind. The market is a sophisticated model of who we are. Remember, everyone that's trading or those that can control the experience have thought of it. Okay, and then they, of course, elicit people's help to get them to program machines and all of that to get it to work. But these participants can create the outcome and have designed the function, the numbers and the percentages that's on the chart, and they have designed it to make sure that the outcome will absolutely happen. The fluidity is a function of the market, so it's fluid, and that's the function itself. All right, and they have designed it to make sure that the outcome will take place. We can only trust in the function. Okay, we can choose outcome. We choose it from the mind, but we can't control it. Once we start acting, there's variables at stake by which we can't control someone else's participation, and that goes back to the primary and secondary, where you have to have a level of compliance. So when you look at the market, you don't have to comply. They have the flexibility. They have the function to say if you want to buy, they can still benefit. If you want to sell, they can still benefit from either choice that you make. They can still benefit and actively do that. All right. So the DTT, no touch, no close, is a real-time identification process for that function that can be recorded historically for a reference. And that's what the colored bars and the levels and the NC is all about. So when you get the NC, that's just a no close bar. So when you see the NC text, that's the no close, no close. Now, if you're trading moving averages, all right, so if you're trading some kind of moving average, support and resistance tool or whatever, we're going to take a look at all that information. You got to be careful not to get into the market too late. You got to be careful because once it reaches its destiny, it will turn around. That's what it would do. So I advise you strongly that if you can, try to get in near the thought. Try to get in as soon as possible. So that way you can be out in a reasonable amount of time. And so the goal is to go for the distance of the signals. So when I show you the signals, try to go for the distance of the signal. So if the signal came in with 2 bars, try to go with the distance of the 2 bars. Try to go for the distance of the two. Now, remember, I told you every bar is a trend. So you can go with every bar is a trend. You can just do that. Go for a bar. If you see a bar, go for it. Go for another bar. They're almost there. They're almost there. Go for the signal. Go for the signal or the bar itself. So every bar is a trend. Let's see, can it absolutely get there? Again, the pressure will fire off, and this is included in the indicator suite. Everything you're looking at is inside of the suite. That horizontal line will fall beneath the bar's low, and then the pressure will come on and say, hey, that's there. So even if you didn't have the line up there, and this is provided as well along with the threshold on the bars, all of that come with the bar percent. I give you a bar percent that has that information and a lot more. So it's not just the 3 lines you're looking at. There's some other information that's included on the bar percent to help you trade these markets. All right. Because it's all about numbers and percentages. That's what the market is doing. Very useful. Now, the chart scale, I didn't talk to you about that. I need to do that. This is the center of the chart. It's universal as well. All right. So from the center of the chart to the upper part of the chart as well as the bottom of the chart, you can look forward. You don't have to look backwards. So you can look forward and know that there's a chance that the market will absolutely turn. Should it get here, or again, it can get back bullish from here and just take back off. It can't, or continue to fall down. So these are the universal approaches that I've released online. We have our wick threshold, we have our no touch, no close, and then we have our chart scale, and we don't have the trend down as of yet, but it started with the up. It started with the 7 bars. It did. All right. So I wanted to have you know that. And once it gets to the distance, you can go back through the videos and learn all of that. Once it gets to the distance, it's a chance that it will rotate. I want to say that to you. So let me just minimize this and get this out your way. Everything that I'm offering for, again, $200, it's a follow the plot process. I want to say that to you right now. It's a follow the plot process for $200. I will not be doing any kind of Q&A about the indicators. Follow the plot process. There's an asterisk beside each bar. Okay, well, I'm sorry, not beside the bar, but beside the ones that are more significant. There's an asterisk there that you can reference. And I'm going to show you some of the most important ones on the chart I am. It's 9:21, so we got 9 more minutes. We're going to have to hurry up. And I'm going to show you pretty much all of the ones that have the asterisks. I'm going to try to show you the ones that's most important. And of course, these are the text signals. These are the other functions. You get sound files, you get levels, you get just a lot of stuff, bar coloring, a lot of flexibility, And all of this can be obtained to help you filter it out by the one who understands the universal concept. So I'm delivering to you this information. I've been training for a very long time. I'm an older fellow. This is important. I'm not going to leave it up to you to try to filter out what makes sense when it comes to the universal approach. I'm going to be the one to tell you that this is important. So if you should purchase the suite, the signals are reiterating the information that I'm disclosing on the channel with a bit more of experience behind it. That's all. So let me get rid of that. Now, this morning at 7:15, I took this snapshot. Now, I've known that these levels was there before I took the snapshot, but I just had it on my mind to go ahead and do it. So here's the snapshot. We had the FOMC coming at 2 o'clock. And of course, the CPI that was at 8:30 and it's 9:22. Want to see if price can close above here today. All right. So that information right there, and that's that red zone we're operating in right now. So we want to see if they can close above here today, if not by Friday. And if not, let's see, next Friday, can they get above here? And should they not want to, let's say they get here and just kind of lean back. Let's see if they can close above here by July the 1st. Let's just see if that's possible. Now, let me get rid of that. Your ICT information, these two green zones are my zones. All right, they're my zones based on, I'll show you, yesterday they fell down and they, hit this area over here. I'll show you the text signal. That was right there based on my indicator. All right, based on my indicator. So these are my zones, the darker green ones. His information is not in here. So that ICT stuff, I did put a version of his, and you can have that inside the indicator pack as well. There's a ICT version in there, and I have one as well, and you'll see that on the next chart coming. I have a version of that ICT gap stuff that I did that's not, not on every bar. And so you'll notice that before there is a box, if you will, or gap around a bar, there's a red bar and a level before the box because it only requires 2 bars. So having that information there, to me, is just a little too further out. Now I got 3-bar signals, 2-bar signals, 1-bar signals. Give you a lot of flexibility, but the red bar is going to show up in 2 bars, or the green bar show up in 2 bars. And in some places you don't have that gap at all. So when it comes to the higher highs, lower lows, breaking up structures, there's no zone that caught that bottom yesterday. I hope you know that. There's no zone of his that caught that bottom. All right, none whatsoever. So when they're in some kind of zone, that's his zone right there. And these are his zones. All right, so these are his zones. Supposedly, whoever coded this indicator, I didn't want to put their name up here because I'm not trying to do that. I only want to show you what I'm doing. So there's 2 different indicators up here. I don't know if it's from the same individual. I don't know. It's just 2 different indicators. But you have your higher highs, breaking up structures, and these are my zones. That's why I made them darker. And then there's his zones is with this line in it. All right, some with the line in it. So this is his information. Yesterday I ended the video. We were right here, but I started it when we were like back here. they never came back to our zone, which is this green one. We saw this being formed. It formed itself. They never came back. And this is me filtering out that signal. So that ICT stuff, you can go with that if you want. Breaking of structure, breaking of structure. I don't know what that means. How is it that you can't already be in it? That's important. You got to already be in the trade before any of this zone stuff show up. You got to already be in it. And again, everywhere that you're seeing those gaps between bars, you can see that there's green bars before the gap. So don't wait 3 whole bars to get that zone between the bars and then want to take the trade. Don't do that. Don't wait until it breaks some structure and come back and then you're ready to go back that way, because then you're ignoring the 7 bars that's headed in that direction that can keep it going up. I want to say that to you. So just want to help you with the whole ICT experience. Now, on yesterday, this is a chart actually with just a few more indicators. I'm going to show you the one directly from yesterday, but I wanted to show you just a couple more indicators that's in the indicator list to help navigate some of that back and forth, because they were right here doing a lot of back and forth. And I wanted to put just some of the other indicators that I have in here so you can see it. Okay, so we had the IN, that's the increase here. That's somewhere up here. Let me find it for you. That's the increase. So the DTT increase, you'll see an IN on this bar right here. 2-bar signal, but again, it can get you going. We had the IN here. That's the increase here. Of course, we had the IR back here with the blue outline bar. Okay, that kicked it off. There's your C3 with the 2. And of course, you got just some dots in here as well to kind of help you know that that's there. And we're going to look at the chart that we had yesterday that didn't have as many signals, but I did want to show you some of the other signals that was there. And as you can see, they never came back to that darker zone. They never made it back. They just stayed up, and we're going to go and take a look at that information really quickly. All right, so this is the chart that I had on yesterday in yesterday's video. If you want to go back, you're more than welcome to reference that information there. It was in this video here. So tools at work, example 1. Example 1, price ended here. Price ended here. We stopped the video here, but we came in at about 10. It was about a little bit before 10. So it was over here, somewhere over here. We had started the video. We saw all of this form right here. So the blue bar, this is a blue bar with the outline. Well, the green bar with the blue outline. No touch, no close, climax. That's the climax. No touch, no close, climax bar color. No touch, no close, climax bar outline, as well as the level. We got 3 more minutes, and then we're going to look at the real time. They managed to, of course, dive into that. And you can, of course, rewind the video, and you can see there was some text in here. The increase was on the bottom here. And then there's the bar that we finished on, because we were going for the distance of the 2 bars. We were just going for the distance of the 2 bars. So what I'm doing is I'm taking the time to filter the no touch for you, so we don't have to have a whole bunch of people online trying to figure out what's the best strategy, how to filter out which one is. We don't have to do that. And there was none of his zones under the chart, under the market. Now, what caused it to turn? Let's go take a look at that. It's 928. I'm trying to capture that 930 for you. We had the IR back here. So that's the ignition run. So we had that right here. Price leaned over into it, and bang, it took off. Took off to the upside, and it never made it back to that one. Okay. And then from there, again, we were looking at the 930 information here. Well, it was after 9:30 because I couldn't make 9:30, so I said I would do it today. So we got like another minute left, and so they managed to stay above that information all day. And so this is what the signals pretty much did all day long. I just want to show it to you so you can see yesterday's activities with the signals, and you can pause the video and just take a look, and you can see for yourself whether or not it would have been advantageous to even use the information. All right, so that's that. Now let's get to 9:30. Let's go ahead and get to that. Now, this is that zone from that daily snapshot that I showed you. You can rewind the video and carry it back if you want. This is the, I believe it can get back up here, but let's just see what it does. Here is the aggression reverse. So that's the aggression reverse signal right here. And then you have IRs in here, and they're not getting past those. Now let's just open this up just a bit. And we're going to watch 9:30 and see, can we get this stuff to give us just an idea where it's going. So I just want to X out a couple charts here. Oh, not that one. Let's see. All right, so yeah, we okay. Let me X out of this one. We won't need that one anymore. All right, so Let's see what we got. Let's see. 9:30 is about to come. Let's see what we got. Let's see. See what type of signal we'll get. I'm gonna open up this 1 second. I'm gonna open this up as well. All right, so here go 9:30. Let's see what the tools is telling us. Now this is my version of that gap. Okay, this is my version, which the levels are a little bit larger. Okay, let me just minimize this really quickly. All right, let me minimize this. And I'm gonna show you that the levels for the ICT stuff with my information is just a little bit bigger than the blue levels. It's just a little bit bigger, just a little bit bigger. That's all. All right, so there's 9:30. Again, I drew that zone there. I drew that zone there this morning. All right, drew that zone there this morning. So we want to see, just want to see if they can close outside of the zone. Just want to see if they can close outside the zone by Friday. Friday. So today we got a little bit of news. They may want to go down. May want to go down. But you, again, you can obtain these tools. You can. They're yours to have. Let's look to the left just to see if they'll, go back up. Let's look to the left and draw a couple zones while they're doing this. Let's just do this. What do we have under us? They jumped out of that area there. Let's see what that was. Okay. Oh, so they never passed this. That's what that is. They never passed this right here. Okay, so that's this. They never passed that 2-bar signal right here. They never passed it. These two green bars, they didn't pass that. They kind of came down into it and then of course popped up. Now if you wasn't we got a lot of signals back here. Let's put something on that as well. Let's just drop this here. Kind of had a lot of signals right there. So my indicators will filter it for you. That's all. It'll do it for you. It's the whole engine effect. If you got an engine, there may be an engine. This is a blue bar, and this is a blue bar, and then you kind of lean back into it. They had a couple of them though. So if you got an engine in your car, now this is a trend down supposedly. Let's see if we want to do the distance. I'm gonna be honest, I don't think it will. That's 1, 2, 3, 4, 5, 6, and here's your 7th one. I told you I don't think that this a whole, but I'll just do this for illustrative purposes. Let's see, just to give you an idea how far it may drop if it don't want to go back up. So if it don't want to go back up, this is how far it will drop. Okay, so this is how far to drop if it don't want to go back up. Now let's open up our 1 second again. Oh, didn't want to lift that. Want to go with this. Let's lift this. And so here I got the ignition pressure on the 1 second chart. There's ignition pressure on this one as well. And so what will happen is, well, they're diving into this, but what will happen is when that criteria for the IR shows up, when that criteria is there, it will fire off in real time. So you'll be able to read it in real time. And again, it's on a 1 second chart as well as it's on this 1 minute chart. It's on both. So the goal is this is a blue bar with the outline, and it's an AR under it. So yeah, I think they can get through this high. It shouldn't be a problem. Now, all we're doing is taking a look, trying to see on the way, can we get this to run? So if it leans back, let's get us a couple of areas in case it leans back. Let's just do something to this effect here. So let's get us a zone just in case it leans back. It may not want to. It may just go straight. All we got to do is get them above here, and they're breaking that high. Now, let me kind of lock this. I want to lock this because I want to keep this on top while I'm doing this. We want to try to get them above, what is this, 02? Yeah, 602 and a quarter somewhere, give or take. I want to try to get them above that. That's all. I want to try to get them above it. And again, it's 934. I want to try to get them above that information. Just want to get them above it. And again, I'm not going to leave you to try to filter out what's there. These are all the tools. Let me show them to you one more time. These are all the tools that you can have for $200. And again, it's a follow the plot process. Follow the plot process. I'm not going to leave it up to you. I'm not going to leave it up to you to try to filter out what makes sense. I'm not going to do that. I want to do it for you. It's really simple. I'm going to do it for you. And we want to try to get them above because I know the FOMC is coming later, so you may be able to utilize this information. We're going to try to get them. I can't do it on this one. It's too small. Let's do it on this one. 02, 02 and a quarter, 02 and a quarter. We want to try to get them above that. Let's lock this again. We want to try to get them above that information. And again, I don't want to give you nothing, probably about another 5 minutes of this. I don't want to bore you. I want to hurry up and buffer this, get this information to you so that way you can benefit from it. Should you be able to view it, if you're not trading, you can view it and say, hey, let me see if I can utilize some of this information today. Now, they may not want to get this far back here, but I put that there just in case they may want to. Now here, let me size this down just a bit so I can get these zones here. This is the blue bar with the level. I know on yesterday we had the information and they just stayed away from it all day. I don't know if that's going to be the case with this one. I don't know. They may want to dip back just because of where they're located currently. Just because of where they're currently located, they may want to dip back. May want to dip back. Let me see. Yeah, they may want to dip back. So let's just see if that's what they may want to do. That's all we can do. That's all we can do. I'm changing my daily. Okay, there it is. All right, so let's see. I mean, they're coming close to it. I mean, you have this here. I would just like to see them come under here, but you do have that zone as well. And they're coming back in. I just want to see them get under here, but you have this one too. You have this one too. But I want to see them actually come under this. I want to see them come under this, maybe hit this one and then flip and go back up. But if they're to turn, they can turn from here. They can. Now, they played it from the top side here. They played it from the top side. They pulled right into that information. And I coded the 1 second and the range chart indicators. There's range chart indicators that you would obtain as well. I coded them differently because the behavior is differently. The moves are a lot tighter on a 1 second chart than they are on the 1 minute and higher or whatever. So I coded it for a 1 second chart. If you want to try to read it while it's raw, while it's coming into the platform, if you want to read it, it'll give you that information as well. All bars are not significant, so you're not going to see bars being, colored while it's in a run. That just because it's running doesn't mean it's important. It's running here, but that's not important. It's what it did before it took off running. That's very significant. What did it do before it took off running? And that's where I want to show you with my tools. I'll filter it out for you. You don't have to wonder which no touch pattern is going to actually hold up. I'll show you. I'll show you with my tools. You don't have to wonder. It's not just a gap between bars that get this stuff to work. It's a little bit simpler than that. It's a little bit. Okay, they blew through that zone. That kind of makes sense. So they only stopped at this one. They didn't want to go to that one. So they stopped at these green ones here. Yeah, kind of double back in this one twice and took off. Couple more minutes. Only got 2 more minutes here. I'm gonna be with you. Kind of wait for them to break this high. And then from there, again, we'll take a look. Maybe in next week sometime, I guess. I don't know. I don't want to keep making videos and boring you guys with this information. I don't want to bore you. Just want to give you some flexible alternatives. That's all. So if you want a professional opinion on your chart, because that's all my tools are. They're my opinion of the movement. If you want that on your chart, you can have it for $200. Really simple stuff. I know a lot of people are selling indicators for $350, $400 for 2 price patterns, and it has nothing to do with universal concepts. Stuff that can be applicable across the board, and they're not providing the education for free on how to understand markets, so you don't even have to have the tools. The tools is just an added bonus of being able to refine your entry. It's knowing, again, what type of engine is in the car. So every car has the engine, but this engine is going to really cause it to go from 0 to whatever really fast. And that's what my tools are meant to do, to let you know this one should cause that effect. And should it not? And this the other thing I want to tell you, should that not happen, that's a problem. That's a problem when that doesn't happen. Making sense of the activity. That's all. Making sense of it. All right. So that's my time with you guys. We're going to see if they can push through this. It's 9:40 again. I don't want to hold you long. They're only like a bar or so away from it. Let's see. I'm going to hold it just long enough for them to break this high. And then after that, I will be leaving you guys. And I just want to make sure that you understand ICT. I see a lot of that stuff online. I totally get that. I get it. It's not to say that it wouldn't work. I showed you his gaps between bars are present. They're present on the chart because it's not what he thinks. It's not what I think. It's what is actually taking place in the market on any chart. On any chart, long before he or I or any educator for that matter, or any trader for that matter, this stuff has been going on. It's really important that you understand what's universal. Once you understand what's universal, the function of the market, then you can begin to interact with it based on it's a decision place. All right. So that's my time with you. Again, you want to see if they can get above, what's this price? Let's go 902. Let's drag this down just a hair. Now let's leave it at 902 because that's what I had in the picture. So let's leave it at 902. 902. Let's go 902 and a quarter. Yeah, 902 and a quarter. Let's leave it at 902. Want to see if they can close above that by Friday. And your worst case scenario next week, we want to see, can they close above here? Now, should they close above here? That's outstanding, and that's what you will want to see happen. The very next thing you'll want to see happen is, can they be above this level by the end of the month? You want to see if they can be above 2025 by July 1st. All right. So I wish you all the best with your trading. Take care.